Hey, good evening, everyone. It is April 3rd. It's a Thursday evening, and it's a few hours after the market closed. And boy, was it a rough day out in Wall Street. It was a day when the Nasdaq went down almost 6%, the S&P 5%, the Dow 4%. These days, we haven't had a day this bad in 5 years. The last time we had a day this bad, we had a pandemic. We had lots of people getting sick and dying, and it pretty much shut down the planet. So we're in that territory of of fear and concern on Wall Street. Year to date, the S&P and the Nasdaq are in correction territory, starting with the Nasdaq 17.5. So we are nicely corrected. Prices are not flying up like they were a couple months ago. You know what I'm talking about. It's like Robinhood just flying up for no reason, and Palantir, Hims. What are some other ones? AppLovin. Those stocks are just flying up for any reason. Just boom, flying up. No more of that. No more of that. No free lunch. Now things are just getting slammed down. And that's what happens is on the upside, it usually gets a little too euphoric. On the downside, it just gets a little too nasty. And that's what we're dealing with. The S&P year to date, we are dealing with a 12.17% correction from the recent high. And this sucker can keep going. It could certainly keep going. I don't see what story is going to pull us out of this. I'm not aware of it. We do have an economic report tomorrow where unemployment is going to be reported. Fingers crossed that comes in at a reasonable amount. If anything, if we show that unemployment is lower than 4.1%, that'll be kind of, I'll breathe a sigh of relief there. Because if it is worse, let's say it came in at 4.3 or 4.5, something like that, I don't know what Chairman Powell is going to do. He'll probably be in a really tight spot, which is, all right, unemployment is up. Are you going to lower interest rates? Which he would probably be forced to. Yeah, we're going to lower them because these tariffs are going to cause a disruption to the economy. More jobs are going to be lost out of tariffs. I think he doesn't want to lower interest rates all too fast because tariffs could also increase inflation. And that's what he's been trying to battle for a couple of years. And the job's almost done. Inflation is closer to 2% than we were a while back. So it's, we'll see where it goes tomorrow morning. It'll be very interesting. So that's what's going on Wall Street. The fear gauge, this thing moved from I think it was at a 12 and now it's at an 8. It can only get down to 0. So it's closer to 0 now. Extreme fear. We are in this extreme fear zone. And when I look at, this chart here where we're kind of going through the cycle, right? The market gets euphoric. Oh man, lots of good stuff going on. This is what we were dealing with in 23, 24. And then we started to see things really break up. And now we're on this downward slide. And we're somewhere here in the middle. And at some point, it'll just people will just give up. They'll be like, whatever, I just don't even want to trade one stock. And we'll begin to rebound again. And we start it all over again. We take off right here. Might be a little slow to get things going. And then we get up and going again. It's just what happens, man. This graph's a little exaggerated. That way they could kind of fit it into one slide. I would say that it's a little flatter than this. It's not as extreme here. It makes it seem like in a couple months you triple the value of the stock market, which isn't the case. So right now we're about here. We'll see how it goes. So thanks for joining early. Looks like Herdo, how are you doing, man? Good to see you. Android PC, bad omen. Brutal market, absolutely. Sabir 2, Bloody Thursday. You got that right. Android PC, the contrarian. You love days like this. You could buy cheap stocks. That's the right attitude. Sergio, next week earnings may change. Downtrend, no. JP Morgan, BlackRock, they most certainly can if they come back and they're positive, right? But just imagine if we have negative earnings and we have a lot of concern, especially on these tariffs, where CEOs come out and say, "Hey, look, these tariffs are really a big problem." That could torpedo the market, and the market can really sell off. So, but if JP Morgan and BlackRock come out and they're like, "Man, things have never been this good in a while, and we think the rest of 2025 is going to be good," that can get things moving. Yep. But I don't think that's going to happen. I think most CEOs and leaders are going to play it safe. They're going to be like, okay, let's play it safe. Let's guide conservatively, carefully, because you don't want to surprise your stockholders and tell them, yeah, we're going to have a really good, second quarter, third quarter of 2025. And you don't, then they really get angry and they sell off your stock. So we'll see what happens. Jay Zev, you want to see CRSP and CBX? So Chevron, CRSP, and CBX. I can take a look. Shadow Guy, 2025 market summarized. Up, down, all around. Yeah. It's been a rough one. And it has been interesting that, we at the beginning of 2025, it seemed to be after a pause, right at the beginning of the year, we had kind of a pause, and then we had a market really take off. And then starting on February 19th, the market really started to sell off. And now, boy, the sell-off has really gotten nasty. So most definitely it's been a market. Now, you got to just remind yourself that, if you're a long-term investor, you're a long-term investor. And yes, it sucks to look at one's portfolio, especially after a day like this, big losses. But you just got to keep your efforts aimed at the right direction, which is building long-term wealth. It's not about, short-term gains. That's for traders. That's for day traders or, the options traders that want to make a fast buck. I want to make big bucks over long haul. And I want to be able to have a portfolio that's really, really good. And I think it's an opportunity as these stocks sell off. It's a great opportunity. I bought a lot of shares today. I pretty much, let me show you what I bought today. I went on a buying spree and bought BHP. Let me make this a little bigger. Hopefully it's coming through okay. Yeah, it's still not very big. Give me a second. Why isn't this? Oh, there we go. There we go. All right. So I bought BHP. This is a materials company. They mine copper and gold. They mine a variety of different metals, and they're located in Asia already. So that gives them I think, a geographic advantage. Ternium is producing rolled steel. It goes into the automotive industry. And I think they're going to get an exception because they feed the U.S. automobile industry. I think the U.S. automakers are asking the Trump administration, hey, you're going to really kill our business if you don't allow us to bring in components that we have to have in order to make cars. Maple Bear, which is Instacart, bought some shares. ADMA, Biologics Healthcare Company. 3M, which is industrial stock. Salesforce, a software company. Futu, brokerage over in China. Viant, and this is a software company helping companies do advertising online. Zscaler, software company doing cybersecurity. Amazon needs no introduction. Occidental, the big oil exploring company. Astera Labs, this is a new purchase, and this is a semiconductor stock that's been really sold off. just sold off like crazy. I think it's down now about 60% year to date. It's pretty bad, but it's a really awesome company, growing more than 50%, profitable, free cash flow. CBS Health, this is a winner year to date, and bought some more shares. It was trading close to just a small loss, but I just want to pick up some more shares. Mercado Libre ended up, I think, in the green today, but I bought more shares. United Therapeutics, a small healthcare company, they're growing really well. And what they do, it's not going to be affected by tariffs. It's going to be a good stock. Google Alphabet, of course, we know what that is. And that stock's really discounted. Catalyst Pharma, it was presented at a nice discount, bought some. Uber had a nice discount today. I bought some Uber, and I bought some Meta, bought some PayPal, and bought some Robinhood. So I needed, if to use an analogy, I was at the grocery store and I needed 2-3 shopping carts to put all the stuff in the carts, and checked myself out, paid for it, and I'm glad I did so. There's feels good to buy shares discounted, but it's a long-term, mission. Let's see these shares kind of go up in value over time. So that's what's going on with my buying. I don't know that we're going to repeat a down day like this tomorrow. If we do, whoa, that's going to be really rough. I think tomorrow is going to be maybe down, but it might catch a rally or two and keep us close to zero. I think we're going to limp into the weekend. So long as the economic data comes in okay. If the economic data comes in and it surprises and it's a bad surprise, it can get pretty nasty again. But I'm thinking it's probably gonna be a pretty muted day, close to zero. But we'll see. All right, so looks like Carlos is on the stream. How you doing, Carlos? Amazon, and you got Meta and Boo. All right, good to see you, Sergio. You didn't buy Qualcomm? No, I'm buying into the other. So I already own about $30,000 of Qualcomm. I'm buying into Astera Labs, which is a semiconductor company. So I'd rather do that. So Rotel and Cheese, Amazon's good buy. They made a bid for TikTok. So Trump agreed to drop the Chinese tariffs if they agree to sell. Wow, what a deal. What a deal. Man, that'd be surprising if it's contingent on one company. I don't think that's fair to everybody else. We'll see. Sabir 2 at this rate. Yeah, we'll see. We'll see. And Mohammed Shen, can you look at ESTC? Yep, we can look at that. ESTC. Android PC. Today I was buying lots of stock, either like HIMS, Adobe, Pins, SoFi. Yeah. Can't blame you, man. Herdo. You want to look at Ali? Glad to. Ali is tied to automotive. So I'd be curious to see how that traded today. I'll give you my opinion on Ali. I'm very familiar with Ali. It's Ali used to be a part of General Motors. General Motors had a finance arm. I think it was called GMAC. And they spun it out of General Motors and it rebranded as Ali. So good little company. They do, I'm going to call it consumer finance, predominantly around automotive financing. And that's what they do. All right. So all those symbols are noted. Just a couple things, just rules of engagement. I'm going to go over a few stocks that I have in mind. I'm going to go over the paid member request, and then I'll get to the free request a little later. Just bear with me. I'll get there as soon as I can. And let's get into a couple of stocks. Let's start off with Ali, and then we'll get into a couple stocks that I want to look at. I am curious to see what Ali has been up to. Ali is a stock that Warren Buffett owns, by the way. So they're $10.14 billion in market cap. They were down almost 11% today. So they haven't done a whole lot over the last couple months. Year to date's down 8%, but today was 11% of it. So if you take today out, they would have been up a couple percent. They pay a nice dividend, 3.64. This is a nice size company, 10 billion. They can double very quickly. Now, interest rates are dropping. That should help Ali because they're issuing out loans. They're making loans to people that are paying a much higher rate than the current treasury yield. So that differential, the net interest margin, is what Ali gets to operate with. And right now it's quite attractive to a finance company. The only problem is that if we go into recession, these guys might see a lot of defaults for car loans. And that would be one of the concerns I would have with Ali. They have a really low PE, 9.55. Price target, according to analysts, is 31% higher. Okay, so this is net interest income. As I was mentioning, the differential between they make loans and then they have to pay interest rate on those loans, either through the bank that they have, because they do a variety of financial services, predominantly car loans. And their net interest income is gone down 2%. Year before that, it went down by 10%. So it's kind of an up and down business. It has up years. I think car prices were really high in 2021. If you remember, there was a shortage of used cars and the prices really got high. So I think they were able to finance it higher amounts, higher rates for used cars. And the volume of financing has gone down. So I'd be curious to see what happened in the monthly. So the quarterly, excuse me. The quarterly is showing a little bit of growth. That is encouraging. Okay. And I mean, this stock's priced at a discount, in my opinion. I've valued Ali before. I think I have a valuation on it. I'm going to double check. Let's see here. Yeah, if I look at, so Ali is a lot like a bank. So I price it based on price to book and price to earnings. And when I do that, it's 48%. Very different than free cash flow because you don't price banks or companies like Ali based on free cash flow. They're financing companies. But overall, I see like a 55% discount on this company. Now, it is a small cap. So as you can see, when small caps go down, they go down fast, right? It's not like JP Morgan. What is JP Morgan doing today? It was down 7%. I mean, that's a pretty good haircut. And Ali was down 11% because it's a small cap. Small caps will go down faster. I know that Citibank was down a lot because I own Citibank, 12%. Wow. So for the 1 year, back to even, provides a nice dividend, but we're back to even. Year to date, it's down. All of it happening today. Really low PE. So Ali's a good, situation there. If it's a stock that makes sense for you, you've done your homework. I think that this one is discounted. Analysts like the stock. Some analysts have a price target of $56 per share. The lowest worst case scenario analysts, $34 a share. So all situations are higher than the current stock price. So having said that, this stock, it's supposed to grow its earnings over the next couple of years. This will hold if the volume of car sales, is what is expected. I'm sure they're working off a forecast of how many cars are going to be sold. So long as that forecast is accurate, they're going to do this type of earnings per share, which is really expand earnings fast. It's doubling in 2025 from $1.80 per share to $3.59 per share. It's going to keep going up in 2026 and keep going up in 2027. That looks really good. That looks really, really good. Again, these tariffs can really derail automotive, but I don't think it will. I mean, you got to think about, the president is a politician. So if he tanks the automotive industry, then there's going to be a lot of jobs lost and people are not going to like him. He's going to have a really bad favorable rating. So I don't think he likes that at all. So, hey, thanks Herdo for the super chat of $5. I appreciate it. Thank you. And really appreciate that. So I think this stock's setting up really well. I mean, the next couple of years should be favorable, but again, you gotta make a judgment call on automotive sales. Where do you think they're going to go? That's why this stock sold off. Is automotive sales have so many imported items. That's what could really stand in the way of Ali having a successful, year or couple years. But the business is good. This is a good business. I've looked at them for some time. Warren Buffett owns the stock. Let's take a look at what other super investors own the stock. I know Warren Buffett owns it. So 5 super investors own it. We've got Francis Chow with Chow Associates owns Ali. Bill Nygren with Oakmark owns it. Warren Buffett. Glenn Greenberg owns it with Brave Warrior Advisors. And Lee Ansley with Maverick Capital owns it. He did sell some of it, but this super investor added. And these are really small positions here. 10,000 shares. So value of 360,000, which is big for us, but these are super investors. Look at Warren Buffett. He owns $1 billion of Ali. He owns 10% of the company. So yeah, you see super investors buying the stock. I mean, they're not going to throw their money away, especially Warren Buffett. So those are comments on Ali. I hope that really helped. And obviously you're a member. So if you need anything else, shoot me a message and I'll get you any information I have. If you have any questions, feel free to ask. All right. So that was Ali. And let me check to see if any new comments came in. Thanks again for the super chat, Herdo. Appreciate it. All right, so let's keep rolling on the list. I'll keep my eye out for any other super chats come in. Appreciate the super chats. All right, so let's look at a list that I want to look at real quick. And the first one is going to be A-Lab. And this stock came in yesterday morning. We did a live stream. And semiconductor is not the first sector I'm thinking is going to work, but we looked at it and I went into it with a low expectation that, hey, this isn't going to look good. This is a semiconductor company. Are you kidding me? Semiconductor is getting killed. $9 billion market cap, 400 million in revenue. Forward P is 44. That's a little high. Analysts really like the company. And this is where it gets really exciting. 242% growth rate. Whoa. Okay. You have my attention. And you can keep my attention if you show me profit and free cash flow. Here, how about this? They were negative cash. And this company hasn't been around a whole lot, right? They IPO'd recently. This is a full semiconductor microprocessor company. They focus on the communications in data centers. So if you have a cluster that needs to communicate with another data center, that's where these guys, their technology, their chips, and their semiconductors, That's where they come into play. That's really growing. So that's why you're seeing these guys grow so fast. Is these data centers are getting bigger and they're getting connected. You have a data center in, call it Ohio, communicating with a data center in Austin, Texas. And you need technologies like these to make those work. Well, their cash flow went from a little bit negative to nice and positive. And gross margins, isn't that a beautiful number? 76%. This is where the money's at, is you design a product, it has great demand, and you can sell it for a very good profit. So this really caught my eye. High growth, free cash flow, profitable. I checked the balance sheet. What's going on with the balance sheet? Well, they got $911 million of cash on the balance sheet, and now they're producing free cash. All right. All that looks great. So I had to get creative with the valuation, because this is not a 10% grower. This is a big, fast grower, right? So I played it safe, but I think I called it the way that I think it's going to happen, conservatively. So first, the discount rate's going to be higher. NVIDIA is 8%. This one's 10%. They're smaller. They're profitable, great, but they're smaller. So higher risk. Now, I think in the first couple of years, the free cash flow is really going to expand, because they just hit free cash flow, and that's what tends to happen with these small businesses. So I'm growing cash by 100% in years 1 and 2. And then from there, 50% year 3, 4. They have plenty of addressable markets, so they'll grow at 5% in terminal value. So that's how I put the forecast on free cash. When I do that, I get $13.5 billion of net present value of the cash flows I expect, discounted at 10%. I add the cash on the balance sheet, no debt to take away. So $14.48 billion of value. It's currently trading at $9 billion, 60% discount. And the earnings per share show a really nice discount as well. So I started buying shares today on ALAB. I am a new stockholder in this semiconductor company, which is why I didn't buy any more Qualcomm. Is I'm not going to buy across the board in semiconductor, not yet. I think semiconductor is selling off like crazy, and I don't know where the bottom's going to be, but I am happy to be an Astera stockholder. The growth rate's really exciting. I can totally see these guys being acquired, because the whole communication and the data center, that's a pretty hot space, and I'm getting really, really good value for the investment. So glad to be into ALAB. I forgot who put that stock up on the live stream, but whoever did, thank you. That was a good one. That was a real good one. So we talked a little bit about Citi. Man, it got crushed. So let's recap today for banks. What happened that is going to affect banks today? All right. First, interest rates went down. Well, I guess that could be a bad thing over the long haul, because if you have low interest rates, bank can't lend out money at higher interest rates. Like when you do a home loan, home loans are going to go down. The interest rate's going to go down. So I guess that's a negative. But I think the expectation that we're going to have a recession is what's hitting these banks the hardest. If you have a recession, then people aren't going to make as much money. They're not going to spend as much money. So Citigroup can't make money on, credit cards and that kind of consumer finance. So those things I think are going to be less than desired. But 12%, man, that is a haircut for you. And I'm doing well with this investment. I've had it for about a year and a half, 2 years. So I'm good. I'm in the green, but really I took a hit at 12%. I think this bank is the best of the big banks. The big banks tend to be priced fairly, but Citibank was I thought priced with the best, price to risk ratio. And I think it's discounted by 47% today after the big haircut. So I like Citibank. I like Ali, Citibank. And when we invest in companies, I saw something online today that makes sense, right? Now I'm not going to use it loosely, but it's you usually make the best buys when it's hard or it's awkward or it's scary or it's like, man, nobody's doing this right now. Nobody's buying into this space. Well, you realize that if you get a very good price to risk to reward ratio and you're like, man, I'm buying way under intrinsic value. I believe in the business. I think they're going to do well. Nobody's buying into it. It's selling off hard. Buy. And I know it feels awkward. It's kind of a lonely place. You might be only a few investors are buying in, but you realize as investors find that investment and they pump up the price of the stock, then you win. Okay. So that's the game that I'm trying to play. And in the case of Citi, I bought it early and I'm sitting on a nice gain. I'm trying to do that with the stock I just covered here, right? I'm sure a lot of investors know about this company because it's a high growth company, but semiconductors not in favor right now, and small caps selling off like crazy. All right, so I'll use the market's momentum in my favor. I'll buy it at a really good discount. I'm glad to do that. So I'm an Astera Labs stockholder now. All right, so we covered Citi, A-Lab. Now, let me go one more, and then I'm going to go to the free request. And let me end on somewhat positive news. So I've said for some time the healthcare is working, and certain parts of healthcare will really show up when things get rough. And Elevance is a healthcare insurance company, and they really show up because they are in essence protected against these tariffs. It's like an insurance company. You don't charge a tariff on insurance. So all those things, didn't touch them. And, the investors that want to go to safety bought into Elevance. They bought into United Healthcare. They bought into safe investments. And Elevance really went up today, which is great. And I've been buying into Elevance. It's been a good investment. Year to date, it's up 23%. So it's a real breath of fresh air. It's really nice to see Elevance do well. You're buying the company for less than 1 times revenue, really low forward PE. Analysts also believe in the company. And Elevance, based on my calculations, is discounted. So discounted really nicely. These health insurance companies do produce a lot of free cash. This one here is set up to produce a lot of free cash. So I'm glad that I own Elevance. It was one of the green spots on my portfolio today. Really glad that I own it. And I own a fair amount. And I think it's going to keep working. I think the market realizes, hey, you know what? Healthcare is one of the spots that is going to be a good place for investors to run and hide after, when things get really rough. Nvidia's down 7.8, Apple's down 9%, Amazon's down 9%, Meta's down 9%. All right, go to safety. Nice healthcare stocks, consumer staples, even the communications, like the phone companies, were a nice place for protection, utilities, and so forth. So that was Elevance. Glad to see Elevance was up today. All right, let's start knocking off some of these stock requests. I think somebody asked about CRSP. CRSP. That's CRISPR Therapeutics, excuse me. And these guys do gene editing focused on developing gene-based medicines for serious human diseases using its clustered, regularly interspaced short palindromic repeats. Wow. Sounds like they're really at the forefront, cutting edge of biotech. Interesting. Out of curiosity, where are they located? They're in Switzerland. Got to ask my man Shadow Guy about this one. So these guys do gene editing, Switzerland. Interesting. It's a $2.8 billion market cap company. We're dealing with US dollars. $37 million in revenue. So it is a small revenue company. If we look at it from a cost to revenue perspective, you're paying about 90 times. Is it 90 or 80? You're paying a lot for revenue. Whoa, look at these numbers. Wow, these are all over the place. You got a year that they went from 3 million to 289, and then they went back to less than a million, went up to 915, down to a million. Man, these numbers, they scare me. What's going to happen next? It's like, geez, why can't they have consistent revenues? That is interesting. Free cash flow for the last couple of years, they've been burning cash. So that's a negative. This inconsistency it's not a good thing. It's a real bad thing. Margins, when they had that good year, the margins were good. Do they have debt? Company like this, debt is the worst thing they can have. No, they have cash, 1.68. Good. This company scares me. Okay. These growth rates are like incredible, but that's because in 2020 they had 0.72 million in revenue. Now we could have blamed that on COVID. Hey, they weren't doing any of these treatments because we had a pandemic. Okay, I'll give you that. And then people came back. Maybe there was excess demand because they couldn't do it in 2020. What happened in 2022? And then why did the revenue go from 23 to 24 and drop by 90%? That doesn't make any sense to me. So you got your homework cut out on this one. And I would not invest in this one. It's just too much high risk. And there's a lot of good options in healthcare. I'd rather invest in, I'm already investing in small caps, healthcare, like 4 or 5 small caps. I'm also investing in Pfizer, got CVS and Elevance. So there's so many good choices in healthcare. I don't need to take unnecessary risks. This one, if you're familiar with this science and you feel like, no, this company is going to be worth a lot of money, go for it. I am not this type of scientist. I'm more of a business guy and understand software industry really well. I understand a couple industries well. I understand pharmaceutical well enough to be an investor, but I'm not a scientist. I'm not, I don't understand what they're doing here, but I do understand numbers. So good luck with this, but this one is not for me. It would be a sell, too risky. The revenue is just, anybody who looks at this has got to be concerned. Any investor that has, I guess, the perspective that I have. So thanks for asking. It certainly is an interesting company. It's incredible how the stock is just rocking up and rocking down. All right. So it looks like Paul, good to see you. How are you, sir? So you're also in Elevance and you're happy with your investment. Yeah. It's good to have a couple of investments like Elevance on a day like today because everything else is just getting destroyed. And then boom, like a little shining star, Elevance. And I also had Kroger and I'm like, those stocks are all right. That's cool. And then bonds did really well today too. So not everything was just a complete loser. So Paul, you also look at MOH, which I believe is Molina Healthcare. Let's take a look at that. So Molina Healthcare, they're also a health insurance payer, similar to Elevance, but they really focus on Medicaid and Medicare, which are programs that for a while this company did really well. Now, the current administration, you see that they were doing really well. This thing was just clicking. And then we got to the elections, and it started to kind of fade. And then with Trump being elected, even this year, man, this thing's doing really well. I was about to say, with Trump being elected, I thought some of these programs might be cut back, some funding might be removed. But so far, so good in 2025. And the 1 year is down. I guess all the selling off happened in the last 12 months. But for the last, especially the last, call it 2 months, this thing's doing fairly well. So this is a smaller cap, 19.6 billion. Revenue is 39 billion. So you're paying about 50 cents on the dollar for revenue. And the forward P is 14.44. So that looks good. We have analysts think it's fairly priced. We look at revenue growth. They are growing their revenue real nicely. They grew really well in 2021. And even in 2024, they grew really well. That looks good. Free cash flow looks good, but it would have been nice to see them be a little more consistent. They had a boom year in 2021 with $2 billion. And then the cash flow isn't consistent from there. It went down to 682, 1.5 billion, down to $500 million. So I would probably take the last 5 years, and that might give us a high number, but just to get an average, maybe I'll take the last 6 years, even 7 years, just get an average and start with a forecast. There is how I would do it. I don't know that I'm currently valuing MOH, but I can do a quick valuation if I'm not. All right, so let's do a quick valuation on MOH. We'll start with Elevance since that's a health insurance payer. Now, I'm a little afraid of MOH because I'm going to use a higher discount rate because we have, a president that is cutting cost out of the government. And I don't think I'm breaking any news. It's just the reality. And when you look at a company like Molina Healthcare, they operate in the space where Medicaid, I believe, is state run. And of course, Medicare is federally run. But it's the states where the new president, or I should say just the president, he's no longer new. He's been there for a couple months. I think he's getting rid of cost that is at the state level and saying, hey, guys, I'm going to reduce funding. I'm going to reduce cost and lower government. So I think that's what he's doing. That concerns me with a company like Molina Healthcare, because if he removes funding from Medicaid, then what's Molina Healthcare going to do? They can't write policies around it, or maybe they have to take more risk. So I would do my homework there, make a judgment call, what's going to happen there. All right, so I'm going to go with a 9 here. It's still a relatively low discount rate compared to others. Like I used 10 with that semiconductor company. So this is what I'm going to do here. I'm going to take like the last 1, 2, 3, 4, 5, 6, 7 years, and then I'm going to use the average. I think that would be fair. I think that'd be accurate. Who cares about fair? We're here to make money. We want to be accurate. We want our forecast to be accurate so that we are forecasting, something that we think is going to be a real number. So I opened up another screen and I'm going to go ahead and start doing these calculations. Hopefully you guys are keeping up with my keystrokes and we can do this valuation in a few minutes. This is what I do to value companies. You're seeing the step-by-step approach. So I'm putting in the free cash flow for the last 7 years. That's 6 and 7. So that's 7 divided by 7. So it gives me 958 million is the average across 7 years. Okay. And that's a way of being, conservative. All right. 7-year average, pop that in there. Now, what happens in this field is, they tend to grow their cash flows. And these guys certainly have shown that. I'm going to keep these growth rates that I was using for Elevance. That is fine. Intrinsic value goes up to 18.3 billion. And cash, what kind of cash do we have on the balance sheet? So they have $8,890,000,000, and then they have debt of $320 million. So we have, all right. Now shares outstanding, that is not correct. So we'll go with Google Finance, and we'll say, I want you to look this guy up, and I want to see the share count. It's going to put the actual number. So we're going to divide it by 1,000,000, because I do, rather than having massive numbers. And I think I got something wrong there. 1, 2, 3. So 55 million shares outstanding. Double check that against their website. That is correct. So we have about a 25% discount using this average cash flow. Now, the most recent year had a cash flow of like 544 million. So that's why, if I started with 544, it would have given me a much lower number. But I don't think that's representative of all the years. I took 7 years, used an average, and I think that's a better way of going about it. So, all right. So double check something. And I mean, that looks okay to me. I think the stock's been really working for a while. It did sell off, and maybe the forecast where cash was going to drop, and the stock sold off for the last 12 months. I would really study their earnings releases and see, what are they guiding? Are they guiding that the business is going to expand and, better days ahead? Or are they cautious and they're like, hey, we're not sure that we're going to be able to grow. We think that some funding is going to be removed from some of the programs we're involved with. I would really check that and make sure that you know what they've been guiding. And you can do that by looking at their last couple of earnings and take a look at that. So let me update the earnings per share. The earnings per share is going to be $24.52 in the year that we're operating in. It's supposed to grow nicely, so I'm going to grow by 10%. And the PE, I'll leave at 18. So there's a discount based on the earnings per share. Now, I like Elevance a little more than Molina. I think the discount is better. It's a kind of better known commodity. They're guiding. This is their outlook that they're providing for free cash flow. But this one here, if you do some homework, you might be able to catch a winner. But hopefully that helps you analyze the company, Paul. Appreciate you joining. I also appreciate you being a sponsor of the channel. Thank you very much. And I'm going to put this guy on my watch list. So that way, if it comes up again, I've got something to start with. So if you're interested in these tools, you become a member, you'll get access to a folder, and you get access to some of these tools that I'm using. I created these tools with Google Sheets, and my background is I'm an accountant by education. I worked in industry as an accountant, then I went into the software industry. So I developed these forms so that they'd be useful to me. And I think somebody who knows the finance calculations can go through it and do what I'm doing. But you got to understand the finance and the accounting, right? If you're doing kind of black box investments, say I load a bunch of numbers and then it spits out a different number, that's not how I like to do things because I need to understand the numbers. That way I can make a good decision. And that's how I built my model. So if you'd like to get that model, become a member and you'll have access to it. This is a sheet that has all my watch stocks. And I also publish once a month. I'll publish it. You always have access. The members have access to all the valuations that I do just as a reference point. And every month I update it. So this one will be on the update that is going to happen this weekend. So there we go. We did a nice valuation from scratch. All right. I'm almost done, guys. Bear with me. Nobody likes to see data entry, but I'm done. Thanks for your patience. All right. Thanks, Paul. Thanks for showing up. Good to see you. All right. I'm going to keep rolling. Make sure I'm not missing anything. I see that I've got some comments. I'm going to return and read your comments in a little bit. Let me just keep rolling on some of these requests that I've got here. I left off. Next stock is Chevron. Chevron, I can cover quite well because I've been a Chevron stockholder for a long time. It had a tough day. It had been operating quite well. Look at this. It was a little rough, but it was sitting on like 15 or 18% gains, and boom, it dropped. And it wasn't a pretty day. Oil prices dropped a lot today. And if oil goes up, then Chevron stock's going to go up. If oil goes down, it's going to go down. This is a very well-run oil company, energy company. And they forward P of 15. Warren Buffett owns Chevron. It's a good stock. Analysts think it's a little discounted. And their revenue is going to be dictated by oil prices. So it's not like they're screwing things up and customers are going away. No, they got the same customers. It's just oil prices fluctuate. And based on where that oil price is going to be is where their revenue is going to be. So when I look at Chevron, and again, I've been a Chevron stockholder for a long time. And I see a 25% discount if I use cash flow, which is the best valuation that I could use. I look at their earnings per share. It's not discounted. It's priced at a premium. So overall, it's a good stock, to own. I own a lot of Chevron. It's a buy for me, but I already own enough of it. And for a while, I thought it was working quite well for 2025. If you look at the sectors, energy is still in the positive by 3%. But yesterday, before we had this red day, right, they lost 6%. Just the whole sector lost 6%. I mean, it was right there with consumer discretionary and technology. So it fell from the number 1 spot down to the number 5 spot. Okay. So it started yesterday, ended yesterday, number 1, and now it's way down there in the rankings. Looks like Chevron's picking up a little bit of a rally in the after hours, but it's a really good company. And where our oil price is going to go, my guess is they're going to go up from here, because if you start introducing tariffs, I mean, it just takes a couple countries to say, we're going to start charging a tariff on U.S. oil. By the way, we export some of our oil. We export some of our petroleum products. We export some of our natural gas. And that can get ugly fast, and prices could go up. And if prices go up, Chevron benefits. So that's what's going on there. Next one up is Amazon. Let's take a look at Amazon. Amazon had a tough day, man. I think Jeff Bezos wanted to get on his rocket ship and leave the planet, probably. Amazon was down 9%. That's huge. This is was a $2 trillion market cap company. And after today, it's a $1.9 trillion market cap company. You're paying 3 times sales. Forward P is 28. That is more expensive than their peers on the very large, expensive stocks. You can get Google Alphabet 17 PE, and you can get Meta lower, like at 23. So this one is a little expensive. It is a strong buy. This is a strong, powerful company that's growing at 11%, and they are the highest revenue company in the United States. I don't think that's going to change because their e-commerce business is just so strong, it continues to grow. They're growing much faster than Walmart that used to have the title, and they're bigger than Walmart. So they're going to start separating themselves from Walmart. Overall, I think, Amazon's a terrific business, but they've been spending a little too much money in that darn data center. You see that their free cash, they got out of this negative cash flow run when they started producing some free cash, but it didn't grow very much in the last quarter. Let me go to the quarterly. So free cash flow jumped up. But if you can compare that to the Q4 cash flow, you see that there was a drop of 10 billion. So fourth quarter for them is the biggest quarter. So that big drop is attributed to the amount of capital expense they're putting into that data center. And when you put money into CapEx, you're taking it away from free cash. Investors want free cash. We want to value these companies based on free cash flow. So that was the big fly in the ointment, is cash flow is going down. What's going on, guys? That's not good. The analysts really love the company because they base their price targets on earnings per share, and they all think it's, priced nicely at a discount. Can't argue with that if you're just going to use earnings per share. But I principally use free cash flows, and I reference earnings per share. And when we look at Amazon and look at what the free cash flows look like, I'm coming up short. And that's because the free cash flow has been dropping. And when I forecast it, I'm forecasting that, hey, if you keep spending money in that data center, your cash flows aren't looking great. So it's no coincidence that after they announced, and first Microsoft is beating their chest, we're going to spend so much money on the data center. A bunch of companies were like, oh, we're going to spend so much money on the data center. And then stockholders started selling their stocks off. I don't think any of them are going to say that on their earnings. They're going to be like, hey, this is how we're going to save money. This is how we're going to avoid overspending on that data center. And Microsoft already started doing that. They said they're going to lease out data center space versus build it and put CapEx into it. So that's the first sign that, hey, they're getting the picture. They're getting the communication from stockholders. So if they could correct that, we can get back on track and value the company a little higher. Now, to me, this is a fairly priced stock. To me, this is a hold. I bought shares today because it just went down so much. And I think it's going to bounce back tomorrow. But if I'm going to consider the big caps, Meta has the best discount. Number 2 is Google Alphabet. Number 3 is Amazon. And, the rest, Apple is priced too high. NVIDIA is priced too high. Microsoft's priced too high. So that is Amazon. Thank you for asking about Amazon. It had a rough day. What's it doing in the after hours? Is it bouncing back a little bit? Tiny bit. Bouncing back a tiny bit. So the same person, I think, asked about Meta. Meta is discounted nicely. It went down 9%. This stock is $1.35 trillion in market cap. You're buying the company and you're paying roughly about, I'm going to call it 8 times revenue. Forward P is 21, much lower than Amazon. Remember, that was in the 30s, I believe. Strong buy, 34% discount. They're growing really nicely. Real nice growth. 22% on a big number. And I think Meta stock is, when we look at the intrinsic value of free cash flows, the company really values well. 61% discount on cash flows. This is my cash forecast on the company. Again, if you're a member, you get a reference schedule. You see what analysis I did. It's not ever a recommendation for you to buy, hold, or sell any stock. It's just a reference point. What was that investor thinking when he looked at Meta? And here's the forecast I got for Meta. So I'm growing it at 10%, terminal value growing at 5%. So it's a really nice company. I mean, I don't have to say many good things about Meta. I think most people realize it's a really valuable business and it's discounted at the current time. It started the year on a really nice rise. It rose 25%. And since February 19th, the stock's really given all that up and then some. So interesting. So that's Meta. All right, hang in there, everybody. I've got 2 to go, and then I'm going to check those comments. VU is the S&P. Of course, it went down 4.77. It's just the index, and that's what it did. I don't own it. I think some people do, which isn't a bad idea. If you want to be a passive investor, not a bad idea at all. And then after that, I can't value it because it's the whole index. So I can move on to the next one, which is ESTC. Elastic. What's Elastic do? Elastic NV is a search artificial intelligence company, delivers hosted and managed solutions designed to run in hybrid public or private clouds and multi-cloud environments in the United States and internationally. It primarily offers Elastic Stack, a set of software products that it ingest and store data from various sources and formats. So it's a data center play. It's like do they do services? Let's take a peek. Netherlands. Oh, interesting. Very interesting. Because I think they're going to be more competitive in Europe. Europe has these laws, like the data can't leave Europe. These guys probably have advantages in Europe for those customers. So products, so they have generative AI, Elasticsearch, observability, okay. E-commerce. These guys are software, huh? Okay. Very interested. Never heard of this company. Let's get back to looking at their fundamentals. So the company is 8.5 billion in market cap. Revenue is 1.4 billion. So 6 times revenue or so. Forward P is 42. Growth is really nice, 18%. That looks good. Curious to see what their stock's been doing. It hasn't really been following the AI hype cycle. It did way back here, but this was before the AI hype cycle started. Over the 1 year, it's down 16%. All right, so 18% growth on top line. Growth is consistent. See how these numbers are consistent? I like that. It's easier for me, have more confidence in numbers like this. This company we're seeing the numbers in US dollars. Good. All right. And we are going to see cash flow 237. It has grown recently. That looks good. Margins are 74%. This is a software company. So software companies have terrific margins. Excellent. So based on their growth rate, maybe I multiply this times 30 minus debt. So this is going to get me to about probably about $7 billion of market cap minus debt. Now they have more cash than debt, so I would add this. So we're closer to 8 billion in market cap. And they're at 8.58 billion in market cap. So this stock is fairly priced or priced at a premium. And its fundamentals are just not adding up to measure up to the current market cap. And so it's priced too high. And I have other choices in software that just give me a better discount and a better opportunity to make a real nice gain. And this stock has not been working. It may be because they haven't gotten enough cash flow going out of the business. I like their margins. I like their growth, but they're just not priced right. So Elastic is a sell for me. Looks interesting, but it's just too expensive. It dropped 10% today. Ouch. All right. Time to check these comments. Thanks for being patient. And just a reminder, I want to ask you to sponsor my channel. You can click this join button here on the main page of my channel on YouTube. You can become a member, and I should be here. Sorry. So this is the main channel page on YouTube. And you come here and you can get signed up, and you get to interact more with me and your fellow investors in the community. You get access to tools. You get priority on the chat. You get all kinds of perks. Please consider it, and I appreciate you listening to my promotion there. All right, let's get back to these comments. I'm going to start at the bottom just real quick because the A-Lab came up. A-Lab will make millionaires. I hope so, because I started buying their shares. It's good to see you. Thanks for joining on X. Very good. Very good. Thanks for joining. All right. So I know that I covered, let me see where I left off here. So there's that one, Android PC. Today I was buying lots. Yeah, you told me hymns, Adobe, pins. Very good. Herdo asked about Ali. Sergio, what's up, buddy? So you wanted to see FRHC. FRHC. And then we got Brandon, MD. I'm out of powder now. Okay. Yeah, I can understand. I spent a lot of money today on stocks, and that's great. And I'm already thinking, okay, I'm going to run out. So I actually started selling some of my bond ETFs today because they were up on price. So now's an opportunity to get better at creating cash. Where can you find cash in your portfolio, in life, you name it? Because we're in this thing for a little while, man. And it might be 6 months and the prices may keep dropping. So I'm already trying to figure out how am I going to create more cash. I'm not out of cash, but I just don't want to run out. And we'll see if I can be successful in keeping cash around. Michael Anthony, you bought more Pfizer. And Pfizer did well today. I think Pfizer's going to do great this year. Good to see you, Michael Anthony. I haven't seen you on the live streams. I think you do the PM ones. Good to see you. Michael Anthony, you're staying away on banks and tech, which still overbought. Laying off Dell, HPQ, HPE, and so many more. I can understand that. Yeah. Android PC. Looking at GRFS, I know of the one from Spain. It's price. Yeah. Well, that might, healthcare is going to work. It's just healthcare works in recessions, and it's not going to be a space that gets a bunch of tariffs, right? So these guys here, 1 year, not too bad. Year to date, doing a little bad, but most of it's from today. Market cap $6 billion USD. Okay. Growth looks okay. Pretty good sized company. Cash flow is not very consistent. That is a little bit concerning. Like to see more smoothness there. And based on their growth, 10%. Okay. Do they have debt? Yeah, they have a lot of debt. Yeah. This is a showstopper for me. Too much debt. This one might be this one I would be a seller. Too much debt, and the cash flow isn't consistent enough for me. Michael Anthony, CNBC is having a special now talking about today and tomorrow markets. Yeah, they do. And that's when the market sells off this bad, that's what they do. You want to buy Berkshire Hathaway? I cannot argue with that, Sergio. Just the one comment I would have there is, I'm an individual stock investor. I continue to get better and better at it. And buying Berkshire Hathaway is like buying an ETF, a mutual fund. Nothing wrong with it. It's just you're making yourself a passive investor. You don't have anything to say about who they're going to buy and how they're going to buy it and how long they're going to hold it. And for some people, that's perfect. And maybe when I get older, I want to do that again. When I was younger, I used to do ETFs, mutual funds. And a big part of it was I didn't quite know as much as I know today about investing. Second, I was working a lot. Like when I did my MBA, I was working, going to school, bought real estate. I used to work on the real estate on my own. I had a lot of things going on. So mutual funds made a lot of sense. ETFs made a lot of sense in those era. But now I like individual stocks. Ali, Michael Anthony, Ali already said car loans will hurt the company. Okay. Buffett has been selling most of all bank stocks. You know what? You're right. Bank of America. He was selling it. Man, that guy's smart. He is so smart. He was selling his Bank of America stock. Impulsive Hamwich. You added more Baba, Baidu. Everybody's buying stock today. Everybody's in the store when it's discounting stocks. Baba, Baidu, IQ, Futu, JD. So I own Baba, I own Futu. I own an ETF that owns Baidu and JD. So I'm good with those. Sad I didn't grab Baba most pre-market. Yeah. Baba did okay today. It didn't sell off too much. All right. So Michael Anthony, more pain for banks and insurance. So many tech. Interesting. Michael Anthony, T keeps moving to new highs. Yeah, AT&T is good for some investors. I just hate their debt. And I just won't own their stock because of their debt. That's just how I roll, man. I look at debt and look at the debt that AT&T has. It really is staggering and it concerns me. Turk Hollinger. They say that what goes up will come down. Sure hope it goes up. It will. It will. Lyft popped back at 13. So what's going on with Lyft? I'll put that down. We'll look at it later. I don't want to keep people waiting that have stocks on the list here. So Jack Lake, you want to look at Visa. And then I think it's Limao. How you doing, man? Very good to see you. Thanks for joining. Michael Anthony, look at SLP, which report earnings. Interesting. SLP. Take a look. I do follow Arista Networks, and I have so this is Lamu. I have a video on my channel. I think I have a valuation. When I released that video, I got a lot of feedback, which is great. Hey, I disagree with you. I think Arista is worth more. I thought that it was priced too high. I probably still think it's priced too high, but I'll share my analysis with you. And feel free to have a differing viewpoint, but I'll show you what I'd come up with. Buffett owns Oxy. Yeah, I've been buying into Oxy. I like Oxy. We just need oil prices to go up. Michael Anthony, you bought Amazon today. Which others did you buy? I think I showed it earlier in the stream. So watch the recording. I listed out all the stocks I bought. It's a long list. I bought a lot of different stocks. Mohammed Shen, you're welcome, sir. Thanks for joining. And then Jay Zev, good to see you. You are welcome, sir. It looks like Ann, you are asking about some of my favorite stocks. Mercado Libre is one of my favorites. I bought Mercado Libre today. Not only am I keeping an eye on it, I'm buying more shares. Michael Anthony, I have a bad back what the doctor must cut and hope to fix me. Man, I hope that feels better, man. I know I've gotten some back issues and I'm glad I'm behind that whole deal. One thing I could tell you, this isn't a health related channel, but what helped the most for me from my back is I got in the gym and I made my core strong. That really did help a lot. And non-doctors told me that that's what worked for them. So I tried it and it worked. And my doctors were next when I told them, hey, my back doesn't hurt anymore. I've been doing a lot of core. They're like, whoa, that was a really good idea. But they didn't suggest it. And I like doctors, by the way. They're good people. And Michael Anthony, big fun today. Bought shares higher on Lyft. Okay, we'll look at Lyft in a little bit. I think I've got somebody waiting on FRHC. Sorry to keep you waiting. As you can tell, I'm like a one-person operation. I'm like that hot dog vendor in Manhattan. Got 100 people in front of me, and I'm trying to serve them all. Freedom Holding Corporation, through its subsidiaries, provides securities, brokerage securities, dealing, market making, investment research, investment counseling, and investment banking. Man, what is it they don't do? So it's a financial services company. Let me get a drink of water. Market cap, 7.7 billion. It was down 7%, but who wasn't down 7% today? And the revenue was 1.5 billion. So that's not too bad. P/E ratio is 25. Revenue growth. Wow, look at that. So interesting. So these guys are getting into a variety of things. They're lending out money. They're doing brokerage, commissions. And they're doing a good job. Good revenue growth, right? Looks good. They're driving good cash flow in the current year. But they did lose a lot of cash in previous years. So what's the story there? What is the story? Margins are low because it's financial services. So this kind of scares me a little bit. What happened? They have a fiscal year that ends March 31st, 2024. And what happened in that fiscal year? What happened in the fiscal year that ended in 23 and the year prior? I mean, that's not good. So I want to understand that. So you got to read the earnings releases of what was going on there. What drove the free cash flow to be negative? Was it they had to put a lot of CapEx in the business, but 3 years in a row? That doesn't make any sense. And then they have free cash flow being positive. Okay. Now they have really high growth, so that looks exciting. So this might be a stock that could really reward investors. Heck, this thing might be worth like 25 billion, assuming they don't have a ton of debt. And they do not have a ton of debt. They have more cash than debt. That looks good. But you got to do your homework on those negative cash flow years. Why was there negative cash flow? Okay, so that is has to be answered. Really understanding the business. So this one's a pass for me, but I would say do some homework. And these businesses have been selling off. Businesses that are in financial services like Blackstone, Robinhood, they're selling off. They were doing, man, look at this beautiful chart. Talk about really nice chart. And did they just IPO? No, they've been around for a while. Even this chart is phenomenal. Look at that. Whew. So why do they have negative cash? And when they had those negative periods, it was here, and it looks like they did dip here, but then they started rocking and rolling again. They really went up from 65 a share. They pretty much doubled in value. So this stock's really worked in the past. So get to know this stock. Robinhood's kind of been in a similar boat the last year. It's really done well. And the other stock we saw was Interactive Brokers. They did really well. So this pack of companies has been doing really well. Interactive Brokers, their fundamentals looked more reliable than these. But take a look. If you find a winner here, you're probably going to be rewarded nicely, although the stock has been moving up for some time. And this is no secret out there. Investors have been making good money on this one. Very interesting one. Thanks for bringing it up. It's not the right one for me, but maybe there's something there that you can really take advantage of. So Mike, the dividend investor guy, hello, sir. You just got power back. So I got a quick little story for you, sir. Yesterday, 9 a.m. Pacific, the power company shut our power down. I'm like, what happened? And then I get a phone call. Hey, sorry, got to work on the power line. So went to the local Starbucks and worked there for about 6 hours. I drank way too much coffee. Then the power got turned back on and I came back home. So my disaster recovery plan is go to Starbucks if the power goes out for me. So do I believe Zscaler, Qualcomm, Adobe, AMD, etc. will continue to drop? So Zscaler, yes. Qualcomm, yes. Adobe, yes. AMD, yes. Yeah, I think the momentum is for stocks to continue to drop. And man, I don't know what to think sometimes. I think you asked me earlier this week if what I thought stocks were going to do this week. And you asked me when we were trading I think we were trading midday yesterday. And the whole, tariffs were going to be announced there and the stock was moving up. And I'm like, the stock market was trading up. I'm like, well, it kind of feels like we're going to trade up this week. I would have thought that people are really nervous around these tariffs. And then they were announced after the market closed and you know what happened. So I think the market on the NASDAQ selling off by 6%, that's a real surprise. When it got to 3%, I was already feeling like, man, that is overdone. Come on. But it got to 6 and I'm like, wow, that's really getting down to the bone, cutting down to the bone. So can it go down further? Yes. Until the narrative changes. If the president kind of makes peace with a couple countries, like, all right, we figured it out, China and the US have made an agreement and this is going to be a fair plan. Boom. Okay. Market's going to rally. And I don't know how soon that's going to happen. And we'll see when it happens. And I have to get some stuff done around the house right now. Okay. No problem. Good to see you, Mike. Thanks for your support. Trader Prad, what's up, buddy? And tell your chat that I say hello. And tell them that, man, all these traders, they're the ones that are making all the money right now. Us investors, man, we're earning our money these days. But I hope you're making lots of money, buddy. If you don't know Trader Prad, he's got his YouTube channel. He's a trader, and he has a different way of looking at stocks than I do. I'm a long-term investor looking at fundamentals, intrinsic values. He goes about it completely different. And I like watching his videos because it's a space that I learned a lot from. And he certainly knows what he's doing. So check out his channel if you want to see some videos around those topics. All right, back to the action. Lyft. So I thought Lyft was a good idea. I'm a big Uber stockholder. I own a lot of Uber stock. But this thing was really trading low. It was really trading down. And this thing's been kind of a basket case for a little while, right? The 1 year down 38. But I was seeing this sell-off going, this is overdone. It's a $4.8 billion market cap company. Revenue is higher than that. Look at the PE, less than 11. Growth, 31%. What? 31%. Free cash flow, $766 million. They fixed some problems they had. I think they have a good balance sheet. Let's take a look. They have more cash than debt. Okay, that looks good. If I just hit their free cash flow with a 10 and add their cash, they're up to $8 billion in market cap. But they're growing at 30. So this thing can really be discounted. Now, the problem with Lyft, is that Uber is so darn good, so darn big, that investors will not flock to buy Lyft. It'll have to be, you know, some investors will flock to get it. I mean, look at this discount on cash. That's a huge discount. But what if somebody acquires Lyft? Because they have a pretty good customer list. They have a platform. What if like a Tesla acquires Lyft and says, well, we want their platform and their user base? That makes a lot of sense. Or maybe Waymo acquires Lyft. Boom. We just got that many more. We got a platform that we can control. They can continue to operate, but we want them to really promote Waymo. Or maybe even like Airbnb acquires them and puts, Airbnb does the vacation rentals. Now they have ride sharing. There's just a lot of permutations that say Lyft could be acquired and it can be integrated into a different business. So that was my rationale. I think it's a interesting idea. I'm not in Lyft right now, but I can't argue with anybody that buys the stock because it's so darn discounted. Goes back to Howard Marks. He says that it's not about what you buy, is what price you paid for it. So I'm putting a little gold star next to Lyft. I'm going to revisit it. Maybe I'll buy into Lyft again. We'll see. So Lyft fundamentally looks awesome, but they're going to need to have something come into the picture that's going to, really increase the value. An acquisition, boom. The acquiring company pays 40, 50, 60% more. Or if they just keep operating and executing the way they are, the market's going to pay attention. Hey, this little company is making a lot of money and growing really well. So that's my analysis on Lyft. Somebody wanted to talk about Visa. Visa is a giant company, market cap 663. And look at that beautiful chart, up 115%, getting the job done. Visa, they do a forward P of 29. Today, they came down 2%, which is not bad on a day like this. 1 year, 22%. This is such a consistent company. It is priced a little expensively because people just depend on this stock to keep doing what it's doing. 10% growth. When we look at their free cash is solid. Look at these solid numbers. Solid. But the best I can do is multiply that times maybe 15 to 20. Let's multiply it times 20. Give them the benefit of the doubt. That gets me to 400 billion. Well, we're at 663, way higher. I'd rather buy Meta. I'd rather buy some other stock that's going to give me a better reward. And that's what I've been doing because Visa's just always been priced at a premium. And they do have, I think I passed by it. They do have $6 billion of debt. So not a big deal. This is a big cap. Now, here's an observation that I have is when you have these stocks that everybody knows what they do, retail investors like Visa, everybody knows what Visa does. McDonald's, everybody knows what McDonald's is. They tend to trade at a higher stock price because people get their heads around that quite easily. Hey, I know what Visa does. Okay, great. So I'm very familiar with the business. Okay, that's fine. Nothing against that. But there's very few situations like that where you have discounts. Visa's priced at a premium. Berkshire Hathaway's priced at a premium. Apple's priced at a premium. And I can go on about some of these stocks that the retail investor is really familiar with. And the people that run these hedge funds and, they can talk to their, clients and say, well, I own Visa, and their clients understand what they own and they can explain it quite easily. But when you get into stocks that, could be really nice winners like healthcare, and you have a pharmaceutical company and they have a drug that's really working like Catalyst Pharma, that stock's really doing well. That's harder to understand and harder to explain. So Visa is a great company. I think it's priced too high. And those are my comments on it. And the reasons why the stock price is much higher is because it's easy for investors to understand. SLP. Simulations Plus develops drug discovery and development software for modeling, simulation, and prediction of molecular properties utilizing artificial intelligence and machine learning based on technology worldwide. The company operates through software and services segments. It also offers Gastro Plus, which stimulates the absorption and drug interaction of compounds administered to humans and animals. Interesting. Cool. So part software, part pharma, growing nicely at 21%. $478 million of market cap, small cap. And they're trading roughly at I think that's about 6 times revenue. Forward P is 38. Growth is 21%. They are a small company, so it'd be nice to see a higher growth rate because they're small. But $78 million in revenue. Okay. They have, I'm not sure why the cash, maybe because they just reported and we have stock analysis has gotten that number. But they have been cash positive, just not really high cash. And the gross margins have fluctuated, and more recently they've gone down. Okay, that's a problem. Why are margins coming down? They should be going up. As you get bigger, they go up. So this needs to be explained. So there's some homework involved on this one. What happened? Why are margins lower? And what is your cash flow for the most current year? They should have that in their 10K. That was none. Let's see. Their fiscal year is going to end August 31st, 2025. So we're not at a 10K. It'll be a 10Q. But you could see what they had in the most recent quarter and then do trailing four quarters to get your trailing 12 months. So this one here, got to get this answered. What's going on here? Why did gross margin drop? Assuming that their free cash flow, so they say cash flow is around 17 million. It's not a lot of cash flow. The business is worth like 340 million minus debt or plus cash. And they have $20 million of cash. So they're priced a little expensively. They're worth about 400 million. They're priced about 480. You got to get that drop in gross margins explained. And again, these guys are operating in healthcare, right? And there's a lot of really good opportunity in healthcare. There's like 10 companies I could show you are just fabulous discounts, better growth rates, better cash flow rates than what we're seeing here. So it's a matter of, hey, if it's a space where there's lots of good discounted stocks, pick the best one. And this one's not even close to the best one I've seen. So those would be my comments on it. It is rallying in the after hours. Look at that. Looking good. Simulations Plus. Interesting. Never seen that company. All right. So now we're going to talk about Arista Networks. Down 11%. Holy Toledo. This thing's just been getting crushed. Boom. They're down 35% year to date. Let me take a look at it here. Because that drop is something, huh? I did videos on Arista on my channel. I did go out on a limb and said, this thing's priced too high. And I guess I've been vindicated. It's down almost 45% since January 23rd. Just getting crushed. And some people said, hey, no, you don't, Victor, you don't get it. These guys are worth a lot more. And I go, hey, thanks for expressing your opinion. I think, keep it coming. But I showed my analysis and said, I think the company's overpriced. They're a networking company with also a cybersecurity product line. And, some of these stocks, am I even? No, I don't even track it anymore. It was just priced too high. I don't even track it because, Cisco is a better buy. These guys, look at their revenue. It's dropping. $7 billion in revenue. When you look at their cash flow is $3.6 billion. At that growth rate, I would say, okay, let's multiply it times 20. We're going to get to about 72 billion. And they're still at 89 billion. So the market cap's much higher than where I think the intrinsic value of the free cash flows are. And do they have any debt? They don't. So you add that 8 billion. So they're closer to $80 billion of value, but they're still priced $10 billion too high. So the stock price is coming down to its intrinsic value, but that's where you're taking a big risk when you look at a stock like this. It keeps going up, but the fundamentals are not going up in this proportion, or they're not really showing that explosive growth. You're buying into a stock that's getting too expensive. And now people are realizing, oops, 45% later. What's the stock going to do next, right? It's not going to rally. Their growth is slowing down. They've guided down. They've said, hey, it's going to be hard to sell into this market because the data center is slowing down. The economy is going to be slower. So Arista is kind of in no man's land. So those are my comments there. Good luck. And I did a video again. It does show the analysis on the video if you want to check it out on the channel. And the next one is Occidental. I like this stock, down 11% because oil prices were down. It's up a little bit. This is going to go where oil goes. It's been down for 1 year. But if I just take the average oil price, I get a really nicely discounted stock here, like 100%. So I'm buying into it. I already own Chevron. I'd like to own Oxy, have a little more exposure to energy. And so far, it's not fun. I've bought some shares into Oxy. I'm underwater by about 10%. And we'll see where we go from there. So Oxy is a good one. I just did Oxy 2 days ago, and I've done it a couple of times. I've posted on our Discord my analysis, and let me show that analysis to you here. Oxy. All right. 90%. Wow. 136%. Just using the averages of Occidental. I think I took the 5-year average. So I'm going to buy some shares and sit on them, just like Warren Buffett's been sitting on Occidental. Let's see where that goes. All right, I finished my list. Let's keep rolling here. Let's see what's going on the chat. And yeah, good luck, Michael Anthony. You have an MRI coming up. Good luck with that. All right. So I got all the comments from Mike, the dividend investor guy, another paid member. Appreciate it. Brian Silva. What do I think about J&J and JP Morgan? Both are blue chip stocks, very well known, and both are priced a little expensively. I owned JP Morgan for multiple years, made money, got out, thought they were too expensive. And J&J has always been priced at premium, except for the times when they got all that litigation going on with the talc lawsuits. But even now, they're just priced too high. And they get a better opportunity with Pfizer. So I'm buying into Pfizer. And JP Morgan, I get a better opportunity buying into Citigroup. So I'm going there. Michael Anthony, DFS, bouncing off $150. What's DFS? Discover. Look at that. Interesting. All right. This is kind of a discounted Visa, so to speak, but I wonder if they're growing. Wow, they grew really nice this year. 2 bad years, 1 great year. Very good. Why are they growing? Are people issuing out, like, are they issuing out more card holders? Look at that, 56%. Wow. Interesting. This is their revenue because they net out, right? They have the card, and if they don't have losses and they make more money, net interest income. Okay. Interesting. This might be a interesting stock to invest in. So these guys, Visa was 660 billion, right? These guys are 40 billion. And it's a lesser known name. It's not really heavily carried, right? I used to be a Discover Card member, but every so often a business wouldn't accept them, but most places did. It wasn't a big deal. I think Discover was created by, was it Sears or one of the big retailers? So it looks interesting that they're growing so well. I'd want to know, why are they growing so well? Is that going to be a temporary thing? And then they're going to start losing, revenue like they have, inconsistent, which is a big concern. Okay, so that's what's going on there. Free cash flow looks really good. Yeah, this one, if this thing is a good business, I'm going to study it because they're really discounted. So DFS, I'm gonna look at it. I'm gonna research it, and I might come back to it on another stream or a video. I think the discount looks really good. If you're doing $8 billion of free cash and you're a $40 billion market cap company, there's a huge discount involved. Let me double check something. Make sure they're not sitting on a ton of debt. They are sitting on some debt, $8 billion of debt. Debt to EBITDA. Yeah, they're okay. They're doing $8 billion free cash and they have $8 billion in debt. That's fine. Okay. So it looks interesting. This looks like it's a discounted stock. All right. Gentleman X. Any thoughts on WDS, Woodside? We've looked at it before. And good day from Australia. How you doing, man? WDS. So we've looked at this one. Woodside Energy engages in the exploration, evaluation, development, production, and marketing, sale of hydrocarbons in Asia Pacific, Africa, and the Americas, and the Europe. Okay. So it's an energy company, down 6% today. It's still down in the aftermarket hours. They've been losing revenue, probably because of pricing for the commodity. Okay. Where are these guys located? Australia. So you have some home field advantage on this one. So they are in Australia. 27 billion in market cap. Revenue is about half of that amount. Forward P is 12. They pay a nice dividend of 8.81%. We're looking at numbers in US dollars. Now, revenue with energy companies, I can't hold it against them that commodities fluctuate up and down. And when I look at free cash flow, I take an average, but these swings are huge. 5.6 billion, 854. This is like a little uncomfortable because what's going to happen next? Is it going to be negative? This one here, it's just for I'm a US investor, so I wouldn't invest in this because it's out of my home country. There's just too much risk involved. But what I would do is I would take the average of maybe, take about 6-7 years, take the average and then go through a valuation of the company. And you'll end up with kind of a baseline valuation of it. And if you see the stock really sold off, it might be a good opportunity to buy it. This thing's down 32% over the 1 year. You see that it was trading up at $26 a share. So if you buy it right, you can probably catch a nice rally and be paid that big dividend. So nothing wrong with Woodside. Energy companies will always be a necessity. And if they own really good, reserves, like they have the rights to certain reserves. Those reserves are going to continue to pump energy, and they can make money for a long time. So thanks for asking about Woodside. Good luck with it. All right, so let's shut this thing down. Let me ask you one last. I hope to get one or two people to join from this live stream. You would come to my homepage and click on the homepage. Then you'd go to the join button. You'd get your options and you'd get signed up. Get signed up and join the conversation. You get to join investor only calls, and you get access to the tools and much, much more. Please consider it, and hopefully I get a member or two out of this stream. Looks like we are through the comments. We covered a lot of stocks today, and I'm glad to do so. Let me end by just talking a little psychology, okay? So we have had I'm looking at the NASDAQ, and I'm looking at a max kind of chart, and it's going back to, I guess, to the 80s. And in here are a couple of things just to remind you of we're dealing with a scary time. Here's the dot-com bubble. The dot-com bubble was a disaster for stocks. Stocks got hammered, and I continued to put more money into the market and continue to buy. I'm glad I did so. And it was scary because it was like, wait, the internet's real. Why are these stocks selling off? And it was because they got overheated, and then it took a while to get them priced right. Then we dealt with the Great Recession, which was, if you saw the movie The Big Short, it was the subprime mortgage meltdown. And that was a time when Lehman Brothers went down. These big insurance companies who had guaranteed these big portfolios of loans, if they would have been held responsible for those, the AIG would have gone bankrupt. It would have caused this collateral damage that would have kind of destroyed the financial networks. So the government had to step in. It was a bad situation. Subprime mortgage meltdown. I lived through that and made lots of money here. I ended up buying stocks. I bought real estate. I bought real estate in 2010, 2011, 2012. I made a lot of money on that real estate. I made a lot of money on stocks that I bought during that time. During those scary periods, I actually put more money into the market. Fast forward to this little pandemic that you may have noticed we had in 2020. I put more money in the market. And the markets continue to go up and up. Okay. So my net worth continues to go up and up over a long period of time. During those periods of time, it got really damn scary. Okay. 2022, we had a nice correction, and I put more money into the market. I bought Meta stock. I bought Google stock. I bought some stocks that I already sold. Like I had StoneCo, made money. Panel, made money, sold it. TSM, sold TSM, made good money on that. So where I'm going is, yes, we're at a difficult time. This is like a tough thing to go through. A 6% drawdown on the NASDAQ is horrible, but we've been here before. And the end result is, if you buy during these drops, like the most recent one is in 2022, if you look at Netflix, where it was, if you would have bought Netflix when the market was like, oh, Netflix is terrible. So terrible, we're going to sell it off by 73% in 2022. And investors that said, I will gladly buy those shares, went up 371%, 81%. I bought Netflix, and it took off. I doubled my money. I got out. Beautiful. Nothing wrong with that. So that's the opportunity. Okay. But we just got to keep our wits. We got to keep analyzing. We got to be rational. We got to be clear-headed and know that markets will go up over time. but the near term is going to be ugly. Some stocks are just going to get hammered. And some of those stocks are going to be the stocks that you might own. So you got to reanalyze those stocks, make sure that, I still believe in that business. I still want to be an owner, and you just keep moving forward. Because what this game has taught me is this was the great opportunity when everybody was like, Netflix is terrible, horrible. It's like, no, that's the perfect time. When it seems like obviously the worst time to buy Netflix was the best time to buy Netflix. When it was crashing and burning, Bill Ackman bought it here, got out, that big investor, and then it went down some more. And then it took off. Actually, Ackman bought it here. He sold it before it bottomed, and then it took off. And on that occasion, I bought it at the right time, loaded up on it during this time. It took off, and I made good money. I want to do that again. I want to do that again on really good companies, and I'm getting better opportunities. My biggest complaint over the last 5 years, and if you tune into the live streams and watch my YouTube videos, is I was complaining that it's really hard to find discounted stocks around this era. And I was right. Things were expensive. And I started selling off some stocks here to create cash because I'm like, this isn't going to last forever. And I've got that cash to invest. So let's have that long-term focus. Let's not buy into the negative. Let's not buy into that emotion. Let's keep focused. Hey, I want to make $1 million over the next 3 years or 5 years or 10 years, whatever that timeline is. I want to incrementally add to my portfolio. I want to add $1 million to my portfolio over whatever timeline makes sense to you. And aim for that spot, and just keep getting better, keep learning. Learn from what's happening. Negative drawdown of 6%. See how emotional this market gets. See how fast it's sold off. And you hear the news, and it's now on CNN. It's on like the general news, which means it's going to have a greater influence on the market. Because now people that really aren't active investors are going to pick up the phone and call their, money manager. Hey, what the hell is going on? I saw on CNN that there was a drawdown of 6%. All that is it's just stocks being discounted. So let's just hang in there, right? And I'll stream as often as I can on the member-only channel. I make myself available. We talk through things. We analyze companies. And I encourage you to become a member, if anything, just to have that forum to talk to other investors, because I think it's going to get worse. It's going to get really damn ugly. 2022 was really ugly. And if anything, talking to other investors just takes a lot of that nonsense out of the equation. Like, okay, we know that some of these companies are worth a lot more. We just got to stick to it. And over time, we will be rewarded. So think about it. And again, keep your head up, keep focused, keep analyzing, stick to your plan. Don't deviate from your plan. Your plan before the sell-off happened, at the end of 2024, your plan was probably, hey, I want to grow this portfolio and I want to add this amount and I want to double it over the next 3 years. That's your plan. Stick to it. Remind yourself of it. Keep studying it. Keep learning, and you're going to be fine. So that's it. Have a good night. I will see you guys soon. I'll probably stream tomorrow, maybe in the evening again, especially if we have a down day, because I think it'd be good to talk about it. So have a good night, everybody. Thanks for tuning in.